All right. All right. We are good. We are back. Okay. Gotta share my screen. All right. Sharing my screen. There we go. All right. All right. Okay, folks. Technical issues, they sometimes happen. The broadband internet here in my neighborhood just went, had to reset routers and everything. Apparently, internet all at the same time. I don't know what that's all about. It's just the current situation. There's nothing to do but hop online. So I did want to wrap this up. I am sorry that this has cost us about 10 minutes or so, but I think there's a lot of juicy stuff to talk about and get into on the Credit Banking Mastermind. So hopefully folks are getting right back on. That would be, I would like to see that, but I don't know what's happening. But if not, it'll be here. We will put the information here and be able to cover this later. I know a lot of people, you got a lot of things going on, but let's talk about where we're at with the with this Credit Banking Mastermind. So again, I'm also trying to give people a chance if they wanted to get back on, because it seems like we were just right at the part where we were going to cover some really critical information, and then boop, the internet goes out. You gotta love technology when it works, and you don't have to love it when it's not working. All right, so what are we looking at here? Well, okay, so the income got cut down because of the current situation, the COVID-19. So some of the things we've got to take a look at is, here, let me pull this over. You know, what should we do? What should we do in this situation? Well, cash, we need to address number one. We need cash flow. Right? We need cash flow. Cash flow is critical. We need. I mean, what is it that we need? What are the three requirements? You know, we're talking about what should we do? Well, let's. What are the three prereq? Did I spell that right? I did.
You're asking
I don't normally spell things right, so.
You're asking.
So what are the three prerequisites for we should put that in there, for credit banking? What are the three prerequisites here? We can move that over just a bit and slide that over. What are the three prerequisites? Well, you need debt. All right, so they have debt. Let's check. And then we also need income monthly. We need monthly income. And we need a line of credit or a credit card. Works better with a line of credit. Okay, so let's see where we're at. Do we have people back? Okay. Well, in this situation, we've experienced a loss of income, so we've got to solve that. Now, in this situation, due to the current situation, we could be getting a stimulus of $2,400, right? That could be coming in. Maybe we'll put that here. What else? We could also have unemployment. I know that they've upped the benefits by as much as an extra $600 per month. I don't know what the base benefit of that's going to be. I guess we have to look at what the spouse's income was and what percentage of that will be paid out in unemployment benefits. Then you also have to look at things like the insurance, the health insurance, things of that nature. So the new job is going to come in, and they're anticipating, you know, in 1 to 2 months, they're anticipating an increase of $1,400 to $1,500 a month in income. I don't know if that figure is accurate. It seems a bit conservative. I do like conservative numbers because then you're always pleasantly surprised. But I'm thinking that that's going to be a little more than 2,000. If I'm just going off of what the tax bracket would be, I'm thinking around no more than 25% federal. I don't know what, maybe there's an additional 10% state, and then you got to calculate FICA. But even then, I still, according to my calculator, I'm coming up with around, I'm still getting around a little more than 2,000. Okay. So, but I mean, we'll keep it conservative. So looks like there's still some, I mean, all this is, let's color coordinate this here. We're talking about, this is all income that's going to be coming in. So this is a stimulus is going to be a one-time check. The unemployment is going to last for a certain number of months. But if you think about it, I mean, here we are in April, and they just have to get to June, I think. Well, it says June 29th. So that means, yeah, they're definitely going to need a couple of months. But if they're going to get unemployment and they're going to get the stimulus, let's take a look at the expenses. So here are the expenses. All right, so $2,900 a month. Well, the stimulus doesn't quite cover it, but it almost does. And there is a little bit less than $1,000 to work with in their available credit, but they're obviously pretty high. So I mean, we need to know what the utilization is. Utilization. What is the utilization? Well, how do we calculate utilization? Well, we would just take what our balance is, pulling out your handy dandy calculator. And so we're at $3,505.67, and we divide that by the limit of 4,500. And you can see that we're at 78% utilization. So that's going to have to be addressed. That we got to get that under 50% as soon as possible. So 32% interest rate. Feels like that's kind of high. Excuse me. So here we are, and we're looking at the situation. So I think with the stimulus combined with the 2,000 they're already making, that would put the income for the month of April at $4,400. And then if we can throw in unemployment next month, because we're only running up $900 short on the expenses given the current income. So unemployment for a couple of months could be what's needed here to carry over till we get to the point where the new income starts coming in. So what is the new income going to be when we put that together? So, I mean, we can go with this conservative figure. I do think it's about $500 to $800 too low, according to my math. But I don't know what all the withholdings are that they're going to make. I would recommend, though, that if you have the ability to maximize your withholdings, you should do so. You should keep more of what you make, because when you pay a lot of money in your taxes, you're just basically giving the government an interest-only loan, and you're not benefiting off of that. I think, first of all, you should start a business. Business will give you the opportunity to have an itemized deductions. So especially in your first couple of years, you're being what's called business startup mode. So that way you can maximize your withholdings, keep more of what you make. I mean, you're still going to have the FICA pulled out and the Medicare, Medicaid. I mean, that's really what FICA is. But I mean, all that's going to be pulled out. And so once that's pulled out, you still keep the rest of what you make. And so, I mean, I like that. Perfect. Okay. So as we look at the 15,000, and then we're going to add that because I believe we're still a teacher. So $1,289. So we're going to add that to the $1,289. And then we're going to, if we have the time, we're still going to add in potentially $600. So what would that all equal if we were doing that? $3,389. Now that's with the teaching job. I mean, in the summer at least, for a few months, you're going to be able to do that no problem. But then you're going to have to make a decision. Maybe the teaching job and the new job are compatible, where you can keep both, but one might have to go away. But if one goes away, I still think that this is about 2,200 maybe a month. This new job right here. I think it's a little bit too conservative of a number, and so you're really close at breaking free. I mean, and the unemployment benefits. I mean, maybe the spouse's job comes back and they go back to work, or they're able to get another job. But again, it looks like even in this scenario, for a few months, if we just look at the 3,389, right? Let's come down here and do the $3,389, and we subtract the $2,900, right? What are we gonna? Oops. What are we gonna get? Well, we're going to have a positive cash flow. So let's change the color on that. We're going to have a positive cash flow of $489. Well, that's good. That means we can start pushing all of the income through the line of credit, and we can, wipe out this balance right away. I mean, we're going to be pushing $3,389 of income through that credit balance. It's going to virtually pay that all off, and we're going to be putting $2,900 of expenses on the card. That means this card's going to get paid off fairly quickly. So let's take that balance of $3,505, right? So we take the balance of $3,505.67, and we divide that by our cash flow of $489, and that equals, it doesn't equal 7 doesn't equal $7. What that is, it's mislabeled. What that'll equal is 7.17 months that it'll take for the credit balance to go to 0. All right, so then your credit balance, the credit balance being 0, then the utilization comes down. I mean, the whole time the utilization will be coming down. Excuse me. So that's really probably where I would handle things first, trying to maintain that credit as best I can, because that's going to be a tool that we're going to use, especially if we're using a credit banking strategy. So in 7 months, we bring the credit balance completely down. Now we can start to we could work on that loan. But what I would do is I would start looking at the debt efficiency of all of the debts that are here. And so, I mean, we got to calculate the debt efficiency. Hopefully you can see my little calculator here, but if we're looking at debt efficiency, let's look at the car payment. So what do? How do we calculate debt efficiency? Well, we take our balance, $4,824.48 that's owed on the car, and we divide it by our monthly payment of $224. Let's see what we come up with. So we come up with a number of 21. Well, let's compare that. Let's pull up another calculator. All right. So I'm gonna have to stick these somewhere. We'll put that over here. Let's calculate some more. Let's do some more work here. So we looked at the car payment. What about that wedding ring payment? So let's take the balance, $2,446.67, and let's divide that by the $250 payment. And what do we come up with? 9.78. So what are we looking at here? This is a ratio of the efficiency of the debt, how well that the payment's being used towards paying down this loan. The more inefficient the debt means a lot of money is being allocated every month for that loan, for that balance. So let's look at, we have a laptop here with, so let's do some more work here. Trying to calculate all of our different stuff here. So we have a balance of $975, and we have a $100 monthly payment. Let's look at the loan efficiency on that. That's a 9.75. So that's very close to the wedding ring. Very close, a little bit lower. What else do we have? And we have that student loan. Let's take a look at the student loan. Okay, so we open up another calculator, just looking at all of the options here. So we take the balance of $12,889.29, and we divide it by the monthly payment, which is $192.91, and we get a number of 66. Okay, so let us arrange these numbers here. So we'll put 9.75, then we'll put 9.78, then we'll put this 2021, and hold on here. What do we got? Oh man, messed it all up. Well, that's okay. We can do it again. We had 12,889.29 divided by, what was that payment? it was like 191. Gotta move one of these real quick. It was 191. So divided by 190 divided by 191. Oh, look at this. I had it all nice and neat, and then over here. So I remember this number. This number was 9.75. So I remember that. Okay, so these are our debt efficiencies. Okay, so I'm trying to put here on the screen, and I put them in order here. So what are we looking at? Well, we're looking at the diamond ring, the diamond ring, the computer. Then we're looking at the car payment, and then we're looking at the student loan. So this is the efficiency of the debt. If you look at it on a continuum, the lower the number, right? So you go to the lowest number, you're going to see that's the most inefficient. That is the debt that should be paid off first, because the way we calculate the debt efficiency, it's kind of like similar to that debt to income ratio. How much of your income is going towards paying this debt? The payment for the computer and the payment on the ring are very high compared to the total balance. So we want to pay those off first. Then the next thing you see is the auto payment. It's coming in at 21. You know, anything under 50 really needs to be paid off first. But once you start going above the 50 on the scale, the debt starts becoming more efficient. So actually, the student loan debt at 67 is the most efficient debt. That's for the balance that you have of $12,889.29. Only having to allocate $191 in a monthly payment is rather affordable. But given that you have lower balances here on these other payments, and you have high payments compared to the low balances, these are more inefficient. So if we were just making decisions based off of the inefficiency of the debt, we need to pay off the computer, the ring, and the car. That would be how we would look at debt efficiency. So when people ask me, well, what do I pay off first? Oops, well, let's close that up. Well, so the person here really wants to pay off these student loans. I mean, these student loans, I mean, I get it. I would want to pay off my student loans too. But if we have a chance of eliminating these other balances more quickly than we do the student loan, because we could free up $100 right here, and we could free up $250 right here. That's $350. So $350 would come out of the expenses, right? Imagine eliminating, right, $350. I mean, what would that be like? Now our expenses have come down to $2,550. So how quickly can we eliminate those payments? Well, we eliminate it at the speed of our cash flow. So there's our cash flow right there, $489. So all we have to do is look. So it takes us 7.17 months to free up the money on this card. Now we look at our total, the total debt here, and we should be able to, these amounts will go down over 7 months, but we should be able to take whatever's left over on this balance, especially this balance. This is low, but we can throw these balances onto the credit card and then use the $489 to pay it down. I mean, $489 will pay off the laptop in 2 months. But again, that'll come down over 7 months. I mean, so one payment and that's gone, and that'll free up $100 of cash flow. And then the K Jewelers. So this one will be a little bit more, but how long is it going to take? Well, 2 months. 2 months, and then 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 2 We just have to take, if we were to start today on it, which obviously we won't because we still need to free up the credit line, but just for the sake of argument, what if we were to take care of that? What if we were to start right away? Well, that would take 5 months, not $5, but it would take 5 months where it's currently at. So that's where the speed of which you pay down your debt is based off of how much cash flow you can create. But as you pay this off, look at what happens, because that cash flow has to go somewhere. So we're going to put the $350 into the line of credit. And what are we going to get? We're going to increase our cash flow now to $839. Now, we can eliminate the auto loan fairly easily. Now that we've grown that, where's the auto loan? The car payment, $269. So we take, how much do we got? We got $839. So let's take the car payment, divide that by 839. And what do we get? It's going to take 6 months, basically 6 months, not $5, but it would take 6 months to pay off. Look at that. Pay off your car in 6 months. And then that's going to decrease this is going to decrease everything up here by 220, your expenses by 224, right? That's important. And so now what will that give us? Well, that'll now put our monthly expenses down to $2,326. And that'll increase our cash flow by $224, giving us what? Now we have over $1,000 of cash flow. Now, what can we do with our cash flow? Well, if we've eliminated all the other debts, now we're taking out that loan. You can see that we're going to take out, the student loan will be paid off in a year. Right? I mean, I can just see that, right? 1,063 and 12,000, right? Just let's do it. Let's see how long it's going to take. We just put 1,063, right? And that's going to equal a little over 12 months. So 13 months, pretty close, right? So look at that. That's some of the things I would do. So I mean, at first glance, when you see the income from 6,250 drop drastically, that's like, that's scary. But when you consider that there is a stimulus on the way, that there is unemployment, that there is this next job that's coming in, we have some options here. And the spouse that lost their job, I mean, I know that unemployment can go all the way to December, but between now and December, the spouse, I mean, there's a lot of places still hiring. A lot of people think, oh, jobs are going away. No. I know Walmart's hiring, Target's hiring. I know that there's, I saw that Walgreens was hiring. There's a lot of places out there that are looking for help. And so there's plenty of jobs to be had out there still, even as quote unquote non-essential jobs have gone away. There's plenty of jobs that you can get in the interim as a temporary job to get by. Unemployment isn't a bad option because, I mean, this has got to end at some point. They got to turn the economy back on. I mean, I'm an optimist, everybody, just so you know. I believe that it's all going to work out. I mean, we face so many other things, the housing market crisis, the Great Recession. We've faced we faced other recessions and slowdowns, the dot-com burst. I mean, there's been so many different things economically that have seemed like it was the end of the world, but we bounced back. And I have just a firm belief in truth, justice, and the American way of life. So let not your heart be troubled, folks. I'm sorry that we had some technical difficulties getting this information out to you. Before we wrap up, are there any questions? Anybody have any questions, comments? We've got a lot of folks that came back in on the webinar. I definitely want to make sure that you're looking. I don't know at what point you came in, but I covered a lot. I think that the situation, there's a lot of options that are still here. I like that in this situation, this person is, their first thought is, well, how do we increase the income? Your first thought whenever you face a crisis like this should be, how do I increase my income? Well, get another job, work overtime, start a business, right? Those have got to be where your mind goes. And I like that this person is definitely level-headed, handling the situation quite well. It's stressful to be in a situation where it looks like the income's going away, but I think that there's a lot of light at the end of the tunnel. This looks like this doesn't look as bad as you might have thought with the fact that there's stimulus and unemployment that's available. And this new job, I think that you should maximize, in my opinion, is you should maximize your deductions, keep more of what you make, start a business. That way, if you do end up owing taxes, you can take deductions for starting up your business to offset whatever is owed in taxes. Yeah, that's what I do. I also, we talked a lot about business credit and credit banking. I would explore in this situation the possibility of starting a business. I notice you don't own a home, so being able to get a business maybe for the purpose of getting some extra lines of credit to maybe purchase a duplex or a triplex where maybe you and your family live in one unit and you rent out the other units, and then those people who are paying rent on the other units pay the whole mortgage, so you then live rent free. Then imagine all this money that you're paying down here in rent and the insurance. So the $1,400 a month, imagine that being added to your cash flow because you bought a fourplex or a triplex or a duplex. That's something to think about, because if you start your business and you grow your business credit and you get access to $150,000, $300,000, there's an opportunity to buy some type of duplex or triplex out there. And as you continue to pay down your debts and you have steady income that you can show through your bank records, you should be able to also qualify for additional funding as well. So I like this situation. Any questions? Anybody have any thoughts? I know this didn't go like our standard masterminds where we have people weigh in, but that's because the internet went out here where I was at briefly. So if there are no questions or anything, then we'll just go ahead and wrap it up, folks. All right. I really appreciate you being on here today. We love going over and helping folks with credit banking. Look, if you want to learn more about credit banking, go to our website, wiseguysandties.com/credit-banking. And you can join the webinar and be here on Tuesday nights, 8 p.m. Central Time. All you need to do is put in your name, your email, your phone number, check mark the 4 boxes, and we'll get you registered. You can also register on our website as well. But also keep in mind that you can, if you want to be a part of the case study, you can put in your information and we'll share it anonymously and we can go over your numbers. Now, normally when we go over a case study, we have a lot of people weighing in and sharing their thoughts and opinions. But unfortunately, because of technical glitches, we didn't get to have that robust conversation that we usually like to have here. But also, if you want to do a consult, this is where you go to fill out that information. Go to wiseguysandties.com/credit-banking. Now, last thing, I want you to go to our website. Folks, listen, now is the time. There is a gold mine out there, a gold mine, literally, of opportunity for you to get access to capital. And it's through starting a business and applying. There's so much money that's still out there that that you can gain access to because it's based off of your financials. So a lot of people, their finances haven't really gone bad just yet because, I mean, if you're applying for different types of lending, they're looking back over the past 6 to 12 months. So just having 1 month here that's kind of in the negative and people understand shows that, I mean, there's still access to funds, but if you let time drag on and you're waiting and you've got a scarcity mentality like, oh, I don't know, maybe I'll just wait, you're going to pass up on the opportunity to start a business, to gain access to lines of credit, loans. I want you to, everybody should be thinking about starting a business. It's the number one strategy to protect you when things are going bad. I mean, businesses are getting access to the EIDL and the PPP. These are extra programs where the government's literally lending you or granting you $10,000, $20,000 in some cases. When you combine what you can do in a business with what you do personally, as we showed today, boom, mind blowing what you can accomplish, how you can help both your personal and your business grow. And if you don't know what to be in business for, there's a lot of things to be in business for. You could start a referral company, you could make a lemonade stand. I mean, whatever it is, sell potions and lotions. But you've got to believe that you were put here to do something. And if it's just that you're going to start a business for the purpose of helping you buy a house so that you have a home to live in for the first time, or to be able to grow your access to cash flow so that you can achieve financial freedom. It's so important, folks. We want you to utilize those credit banking strategies, but we want you to also take advantage, especially right now, of the opportunity to start a business and gain access to capital. It is critical for you right now to consider doing that. And I know it sounds scary because you're like, oh, wait a minute, I don't have. Look, if you sit here on the edge of an opportunity and you let it go, that opportunity might not come back. And another 3-6 months down the road, when you're really hurting for money and everything's dried up, you're going to be wishing that you had told yourself back here today that I really should start a business. I really should look into doing something, getting something going so that I could bring in another stream of income in case my job goes away, in case the job doesn't come back. So we want you to maximize your income that creates cash flow that we use with credit banking strategies to eliminate your debt and grow your wealth. Folks, thank you so much for being a part of us, this webinar tonight. I love this mastermind. I love working with you. We're here every Tuesday night. We'll see you next week. Good night and God bless.